Hello friends, I welcome all the future billionaire here on my channel where we share our knowledge to take you one step closer to your goal. In our session today, we're going to learn about an important continuation pattern which is named as triangles. So let's begin with an introduction about these patterns. So first of all, why these patterns are called continuation patterns? The word continuity used here is to tell us about the tendency of the trend to continue in the same direction, and that is how these formations on the chart help us in predicting the future of the trend. A trend is basically direction of the market. I will do a detailed session on that later. And so what are the types? There are in fact a number of triangular formations which can be there on the charts, but the most important ones we will be discussing in this session, and we will also learn as to how volume play an important role. So the first kind of formation is the symmetrical triangles, and the number two is ascending triangles, and then it's about descending triangles, and I will in the end I will tell you about one of the most reliable patterns used by the experts. So let's start one by one. So the first one is symmetrical triangles, and as I have mentioned here, these kind of patterns can appear in both bullish and bearish trends. This is an example. So basically two trend lines are drawn here. The first one is drawn by joining the lower highs happening on the chart, and the second one is drawn by joining the higher lows appearing on the chart. This is the point of intersection. This line is basically called a level of resistance, and this comes out to be a level of support. Now, if the previous trend was an uptrend, and after this kind of consolidation, if a breakout of this resistance line happens, then this will be a clear indication that there is going to be a further upward movement in the trend. Now, the question that should be arising in your mind is that how to predict the future movements and what should be the entry and exit strategies under such kind of situations. So for that, we have two very tried and tested and very popular methods, and these are, the first one is the height measurement and the second one is the parallel line method. The first method, the height measurement method, what we do is we draw a vertical line over here which is also called as a distance line. We copy it from here and we paste it over here where the breakout will happen, and this breakout point will be your entry level with the target price of this and with the stop loss of this support line. In the second method, the parallel line method, this dotted line drawn over here represents a parallel line which is drawn parallel to this support level, and this line will again give you an idea about the target price and the stop loss levels. Most important aspect that you should keep in your mind while studying these kind of patterns is the volumes. Now the volume should decrease as this consolidation pattern approaches towards this intersection point of these two trend lines, and unless the breakout happens. If the breakout is happening with high volumes, then this is the point we are looking for. Then if this higher volumes at the breakout level confirms that there is going to be an upward movement towards this line of distance up to that point. And now I think I have clarified all the points on this slide. You can pause the video and take a screenshot of this slide for future reference. And let's go to the second symmetrical triangle pattern. Now the second method is ascending triangle patterns, and I think you know what this green color indicates here. This green color indicates that these kind of patterns appear on the bullish market where buyers are more aggressive than sellers. This is an example. So again, there are two trend lines. The first one is connecting the highs and it is a straight line, and the second one is an upward sloping line which is connecting the lows of the trend. This is basically a consolidation pattern which indicates that there is going to be a further upward movement if the breakout of this level happens. I will repeat it for you that this ascending triangle pattern is a consolidation pattern which is there to tell you that there is going to be a further upward movement in the trend. The measurement techniques are same as we discussed in the previous slide, the height measurement technique and the parallel line method. And as for volumes, It is again the same concept. The volume should decrease as the price swing gets narrow and the volumes are noticeably high at this point of breakout. Let's quickly move to the next slide. You can take screenshot of previous slide too, and the third one is now descending triangles. This red color here indicates that this is a bearish pattern which appears in the market where sellers are more aggressive than buyers. This example here indicates formation of lower highs with almost a straight support line, and this is resistance line which is drawn by connecting the lower highs, and this is point of breakout. And if the breakout of this support line happens with high volumes, then this indicates that there is going to be a further downward movement, and for measurement of that downward movement the techniques are going to remain the same. The first one is height measurement and the second one is the parallel line method. And now let's move to another very interesting triangular formation. And this completely red slide here indicates a highly emotional and out of control market, as the experts call it, and these are called broadening formations. These appear generally on the market tops after the previous bull run of the market. These also indicates the end of the previous bull run of the market, and basically there are two trend lines making an open phase kind of structure with the volumes increasing as the phase opens, and if the breakout of this support line happens, then the downfall of the market will start. And friends, as I mentioned in the beginning that we are going to learn about some most reliable patterns of the market. Let's move to the next slide. So friends, here comes the final and the most important slide of this session, which is about two very reliable patterns which are named as flag and pennants. We will discuss them one by one. So the first one is flag, and this example here represents a flag like formation appearing on the chart with this part indicating the pole of the flag. And the most important point is that there is going to be a sudden breakout of this flag like formation with very high volumes, and this pre-pole height will help you in predicting the breakout movement of the chart. As I have mentioned it over here, that there are going to be comparatively lower volumes during the formation of the flag, and at the breakout point there will be very high volumes. And another type of flag which is called pennants is here. You can see a clear difference in the formation of these two charts, where the first one is having a closed face like moment and the second one is having two straight trend lines representing the consolidation move. So now let's quickly understand the entry and exit level strategies. This is the pre-pole height and this is the breakout point which is your entry level, and with the stop loss up to this point and with the target of this point which is right from the pre-pole height. Remember friends, there is no one who can judge the market moves with 100% accuracy, but study of these kind of patterns will help you increase your accuracy and will help you in understanding the human psychology. So let's just get better with each session. Thank you friends. That is it for today. See you in the next session.